We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up NZD, USD. We are on the 12-month time frame. Price action last candle to right hand side is a bearish red doji spike up to the top, so it's retesting the second last candle, which is second last candle, fourth last candle, spiking down to a low. So we're going to see if that market can respect for support, or is it pushing off the second last candle, work its way down through the second last candle and fourth last candle that drops those lower wicks. Current price is sitting at 0.61788. So let's look for price action overall, lower low of structure, red and green. And then we look for price action overall, highest structure, which would be green and red. We're going to add that midpoint in the middle. We're going to take a zone and we're going to place it right over the midpoint, going a bit above. Look at what's going on in the market and what happened. So if price pushes, so we have, let's break it down. So we can see price action pushed up to a high, came from several highs, pushed up to a high, came down to a low, multiple touches to that low. So we do have a solid red and green touching. We do have that first, second, third, fourth, retest, one retest, and we're looking for the market's going to respect this area to push out. If so, market's coming from a single bottom and a triple retest. If price action pushes down from this area here, it can perform so when the market did start off at that, when it did push up to that high, broke through the zone. When it broke, it came back to retest, green and red. So it created that overall structure for that first leg, second leg, third leg, fourth leg, retest, market push. So market's coming from a single top and a double retest, or overall triple top in that area. And we can see price action has stopped in the midpoint of that area. So break it down once again. We have a high. Let's add in second level highs. Let's also add in, we see the midpoint, and we're going to add in second level lows. So we can see price action has broken that midpoint of second level low. So we're going to see if it's going to break down. As I said before, it can be pushing off that previous area. So which is when the market did break, it identify the first, second, third. So we're going to see if it push down, as I said before, below the second or the fourth to last candle, unless it creates momentum and then work its way back up. And if so, that means that the market is respecting the second and fourth to last candle in the market. So finding level. So if price pushes down, how far can it go? It can go near the midpoint, or at least the bottom of the second and fourth to last candle. So if price pushes down further, it can head to the midpoint of these areas. SR lines at 0.53593. If price action pushes up, it can tag the SR line at 0.65400. If it pushes up further, it can break the head up to the following level, which would be the midpoint of the zone, is second level lows, nearing the numbers of 0.75191. And we can see basically market is in a range. So we're going to see if that market's going to break up out that level to head to the midpoint, or head to previous areas of lower lows of structure. Headed to the 6-month time frame. So price action on the 6-month time frame is reading as a bearish red candle, spike up to the high, more consolidation. So it's a weak candle, doji style. So let's read the market. So the market is respected at this area on the 6-month time frame. We'll see that first, second, third, and market pushes back up. Current candle, bearish red candle, so it's identifying it's trying to work its way down, but it has to engulf the second and eighth to last candle in the market to push through and work its way down to the bottom of that SR line that we created, near the numbers of 0.53593. Walk it down to the 3-month time frame. So price action on the 3-month time frame is reading as a bearish red doji, second last candle, bearish red doji. So what's happening in this market is when that market broke, it came from a pattern. So price action coming from a pattern at that high. So we can see that pattern form. So it's overall, so overall patterns that created that break and retest. We do have that first, second, third, fourth retest, where we're going to see that market to push down the previous areas and finally push out. If not, it can create momentum off the midpoint, and if so, market's coming down for that first, second, third, fourth retest, market push up. So we'll see a double pattern form if price action becomes a bullish green candle and engulf the previous price second, third, and fourth, which will lead to the resistance line. Working our way to the monthly time frame. So price action on the monthly time frame is reading as a bearish red candle spike up to the high. So price action candle is retesting the midpoint of that third to last candle. So if that market pushes down further, it will be identified as a break retest, and we're going to see if it's going to be form a pattern. So there's multiple patterns that could be formed in this area here. So if so, it'll identify first, second, third, and we'll see a bearish red candle break through. If it does happen, we'll see that double top. So if it pushes down further, it may not push down all the way to the zone. It can stop at the midpoint. So that will be the midpoint of the price second, third, fourth, fifth, sixth to last candle of the market. Or it can respect it and work its way up for that first, second, third, and market push up for that W formation. Walking down to the weekly time frame. So price action, and let's find some level. Let's go back to the monthly time frame. So if price action pushes down, it can tag the midpoint, as I said before, of that sixth to last candle of the market, which would be the midpoint. So we will see if they're going to head down to 0.60523 and see if it's going to break. Now we headed down to the weekly time frame. So price action weekly time frame, reading it as a bullish green candle spike down to a low. So we can see it spike down, tag those areas. So I see if it's going to respect. So price action is a little bit above the midpoint of the second last candle. So we're looking for a break of that midpoint. So let's put a midpoint line right through the second last candles as we walk down the time frame. We look and see the break and retest. Working our way to the daily. So price action on the daily time frame is reading as a bullish green candle. Did break out from the previous candle on the previous side. So we did receive the break. So we're going to see what's following. Also in the zone on the over the second last candle of the market. So we can see what happened when that market did touch that area as we walk down these time frames. So on a 4-hour time frame, what pattern did we receive? So when market pushed and broke out of that zone that created on that daily candle, market coming from the low of that first, second, third, fourth retest, and finally broke out from overall triple bottom or a single bottom, a double retest. Market broke, retest the top of that SR line. So we're going to see how far that market's going to work its way down. So we want to see if it's going to respect. So if it respects this area of the zone or the midpoint of the second last candle, then that market could work its way up. You'll see that first, second, third, fourth retest, one retest, market pushes up unless it goes back into the zone or we see consolidation. So primarily we're looking for the breakout of the second to last candle in the market to the upside or to the bottom side. Walking down to the three, let's take a look. So we have price and second side by side. So these are doji style candles consolidating, having a hard time pushing up further. So basically a spike, something up in this area, but in a range of consolidation. I can see side by side with price and second. So we did receive the break, and that's the retest with current candle. Headed down to the two, same as well. Market pushed up, consolidated sideways, spiked to low. So price action did pull back. So that market could be respecting. So if so, we'll see that market create that bullish green candle. So it can identify as a break and retest. Market can push. It can create the M pattern for that first, second, may come back for another retest for a final break. Or it can identify first, second for the break, retest, work its way down back into that zone for that decline M pattern. Price action on the 1-hour time frame is a huge bearish red doji, so it's inside the primary second, third, fourth, fifth, and that'll be a sixth candle in the market. So we put break out of the sixth last candle in the market to the top side or bottom side, and it's always going to break through the zone or break above the SR line. So if it pushes up, look for market to break above the numbers of 0.61860. Very important information. Please review and study Forex pattern cheat sheet, breakout retest strategy. Click on images. Okay guys, this is Cam Jones, FX, NZD, USD.